Here are 5 methods to preventing certain types of fraud in your company. These are just random methods, and you may find them useful in operating your firm. This is Dave at AFX Search, licensed private investigators. Many of the frauds that we investigate after the fact could have been prevented with one of these areas of improvement in your company. The first one is financial fraud, where somebody's accessing your bank account, stealing money outside of your notice until it builds up to be a certain amount. And especially if you're a really busy company, you may not notice some of these small frauds or deductions from your banking account. One way of doing it is to keep it from being a large loss. And if you firewall off your account, where most of the money is kept in a holding account or savings account, and then gradually putting it into another smaller transactional account, that will keep the majority of your money firewalled from the outside. For example, every time you write a check, do a wire transfer, even ACH transactions or direct deposit for employee payroll, your banking information is made vulnerable to the outside. So if you have 100 vendors that you write checks to, or 100 suppliers you write checks to, every one of those suppliers has your banking information. And it may not be the supplier itself. It could be a vendor for them, or one of their employees, a courier. So any one of them could take that checking account number and do a transfer to pay one of their bills or to have checks written. So firewalling off that activity account from other accounts is a great way to keep that money from going south. Another obvious one is often overlooked by companies is to have the incoming mail opened by the owner of the company or CEO, or ideally rotated around. So if the mail comes in, you never know who's going to open it on a given day. That way, if it's a bank statement, somebody who's hiding transactions won't have access to the bank statement every time. They never know when it's going to be somebody else. That's kind of a check and balance on that. A third one is vacations. If you have a key person in accounting or management or inventory control, making sure that they take regular vacations every year so that somebody else can step into their role, operate their function to make sure that there's nothing going on that they're trying to keep track of. Inventory is a classic method for diverting assets from a company. And regular inventory audits, where the same person who's responsible for the inventory is not actually doing the audit, is a great way to make sure that the inventory matches up. And spot checking high value items and spot checking high flow items. So if there's a really expensive item in your inventory, spot checking those on a regular basis in between inventories. And if there's a high trafficked item that sells quite a bit, you want to make sure that that's checked also on a regular basis. Payroll records are another really important way to make sure that assets aren't being diverted. Matching up payroll records with actual employees if you're a large company, and hours worked or salaries is a third one. A bonus way to keep money from being diverted: check your vendors for ghost vendors. A ghost vendor is somebody who is really not doing work for you but sending you a bill and you're paying it. When you have a great number of vendors, you may find that it's hard to audit every single one. But a good way to verify that if there's any ghost vendors is to run their addresses. Take the addresses that these checks are going to, or that they're listed in their account. See if any of them match up with employees. See if any of them match up with a local area where if all your vendors are in other parts of the country. And the last thing is, look to see if any of the checks are cashed too soon or too late from the normal check run. If a check is being pulled from your payables and hand cashed by an employee, you'll know because it gets cashed sooner than it would if it went out in the mail. By the same token, if it gets cashed a month later, that might be an indication that it's being held onto for a while. Look at the signature stamps and endorsements on the back of your payables checks to see if they're stamped, if they're just signed by somebody, if they're endorsed over to somebody else. Those are some basic ways to keep some of the very common methods of diverting your cash and inventory of your hard-earned money from your company. If you have questions about preventing or investigating fraud, you can reach us at our website at afxsearch.com.